Douches everywhere are calling themselves traders, sitting around in Lamborghinis they've rented for the day, or sitting around in mansions they don't even own, and you're probably sick of it. There's so much nonsense out there from people telling you exactly what stocks to buy, or the foolproof method that works 90% of the time, but the reality is actually that trading's hard, most people will fail, some will lose everything they own and more, and you're probably better off just investing in an index fund. There's so many lies out there, so I'm just going to cut to the chase and tell it how it is. First of all, I realise this is going to make me a lot of enemies, but the reality is signals do not work. Period. And what I mean by that is that there is literally no magic money making machine that tells you when to trade that will make money, because funnily enough, if that machine did exist, whoever owned it would not be giving that machine away for free. If it did exist, it would be bought out for billions and locked away out of existence so the owners could use it to profit. There are so many global hedge funds and smart money with bigger brains, bigger computers and bigger teams out there chasing alpha that the likelihood that a spotty 20-year-old who spent his paper round money to rent a car for a few hours has an algorithm that can beat all of these people is, well, pretty unlikely. But the real reason they give these signals away for free is because most people lose when they start trading. Dodgy brokers know this and they want as many losing traders signing up to their platform as possible. Why? Think about it. If you know that 80% of everyone who signs up to your platform is going to lose all of their money within 3 weeks, all you have to do is simply take the other side of the trade. And what I mean by that is that if the losing trader buys, the broker sells, and when the losing trader sells for a loss, the broker buys. Now, one of those people made money in that transaction and it wasn't the trader. So what a lot of these bucket shop brokers will do is they will pay introduction fees to find these losing traders, because not only do they make money every time a trader loses, but they can make so much more money from losing traders just by taking the other side of the trade. So when you see a 20-year-old guy making millions, working 10 minutes a day with his free signals, he wants you to sign up to his broker so he gets his commission for introducing you, and you are the sucker. Unfortunately, nothing in this world worth having comes for free, but these guys feed on dreams and the vulnerable in order to lure people in with these get-rich-quick promises, which sadly never work out. I get offered every week by some broker in a faraway land with sign-up fees of $1,000, and I also got offered a 30k partnership as well. These brokers look for people with big audiences or people who are willing to deceive others, so next time you see someone offering free signals, run a mile. So if Forex signals don't work, what about the stock market? Well, another uncomfortable truth is that you are the product. All of the marketing material from fund managers to new IPOs, it's designed with you in mind because they want to part you from your cash. The fund manager doesn't want you investing in passive active trackers because otherwise the fund managers don't get paid with the management fee, and the companies want you to buy their shares as well. Not only that, the broker running the IPO wants you to buy the shares. Why? Because the broker gets paid by the company. The directors want you to buy because they get paid by the company too. The PR company telling you all sorts of wonderful tales, paid by the company. Even the nominated advisors on London's junior AIM market, the very people who are supposed to prevent fraud and wrongdoings, who do they get paid by? Well, you've probably guessed it, it's the company. So the people who are actually paid to keep watch on the company and make sure nothing goes wrong are actually paid for by the company itself, and therefore have a vested interest in turning a blind eye and not doing their job properly. And all of these parties, the company, the brokers, the directors, the PR team, the nominated advisors, they all want you to buy shares in the company because all of these parties get paid by the company. So caveat emptor, because you are the product. So if you are the product, who's your competition? Another uncomfortable truth is that you are your biggest competitor, and it's comforting to blame other traders, other investors, or the market makers, or your broker, but you do have to be accountable for your own results. And this is why so many people fail in stocks, because it's easy to deflect blame and it's harder to take responsibility. You can make excuses in the stock market or you can make money, but you can't do both, which brings us onto uncomfortable truth number 4. Lots of traders will focus purely on their P&L every single time, which is the one thing you can't control. But what you can control is your position size, your entry, your exit, your risk management, your psychology, how you manage the trade, all of these variables that you can control, yet lots of traders focus only on their P&L. Team GB didn't go from being the laughingstock of cycling teams to dominating at the London and Rio Olympics by pedalling faster and looking at the timer. They looked for marginal gains across all of their processes. They looked at how aerodynamic the racing material was. They tested pillows for sleep quality. They measured the effects of food throughout the day. So by focusing on the little things, they vastly improved their end product, and this is why process beats results. Now, this uncomfortable truth is going to trigger people, especially the gurus who offer 95% success rate signals, because entries mean absolutely nothing if you have a bad exit. Think about it, the entry gets you into a trade, but the exit gets you out of it. If you have a bad exit, it doesn't matter what price you entered at. Real trading isn't fun, it's boring, but boring trading doesn't sell courses, and people want to be told they'll get rich tomorrow. People want to be told trading is easy because they don't want to face the uncomfortable truth that trading is a hard business and they might not actually have what it takes and fail. If you can't manage your exits and be emotionless and cut your losses, then you are going to fail. I'm sorry, but it really is as simple as that, because exits are everything. Now, because everyone wants to get rich quick, nobody likes taking 20% profits, which is funny because Warren Buffett returns 19% a year on average, and he's certainly doing better than me and probably better than most people who want to get rich quick. And this is why uncomfortable truth number 6 is that compounding is key, but it comes down to what you actually want to achieve in life. If you want to grow your capital sustainably and with low risk, then if you can compound £10,000 at 15% for 20 years, you're going to have £163,665. But if you compound it for 30 years, it then explodes to £662,117. But people don't want to get rich slowly, and that's why they never get rich. They're just too emotional and too much in the now rather than thinking about the future, which brings us on to the next point. Uncomfortable truth number 7 is that you need systems to override your emotions. The problem with human emotions is that when it comes to trading and investing, fear used to be useful as it would keep us away from predators. For example, if you thought you heard a tiger, it's better to just run and be wrong rather than wait and find out and potentially get eaten alive. But fear in the stock market is often the best time to be greedy, as long as you are buying the right companies or trading the right setups. We also suffer from loss aversion too, which is why we hold on to stocks that are falling, because we don't want to bear the pain of the loss. If you don't have systems and checklists in your process, then you're allowing discretion to come in and potentially lose you money. I know it looks fun sitting by a pool, drinking a cocktail, putting a few trades on in half an hour where all of them win, but that's not the reality, and successful traders are consistent in what they do and they have routines built around their trading and investing and lifestyle. Believe me, when I'm on holiday in the US or in the Caribbean and I have to get up at 2 a.m. because the London Stock Exchange newsfeed starts to roll at 7 in the morning in the UK, I don't want to do it, but if I have positions open, which is almost all the time, then I have to do it because that's what I do. I'm a trader, and it would be irresponsible and even risky to not be prepared. So successful traders create systems and then they follow them. Uncomfortable truth number 8 is that if you want to be successful in this business, then you need to love trading, because believe me, there will be times when it's hard, when every trade you're getting stopped out on and it feels like death by 1,000 cuts. And if you are just doing it for the money, it'll be very easy to be demotivated. But if you actually want to win and just love playing the game, then you've got a much higher chance of success, because you'll just do the things that you need to do to get there. Uncomfortable truth number 9 is that you need to focus on survival. So forget about all of those dreams of quick riches, of sitting by the pool and placing a few trades, because you are going to be in for a shock if that's what you're thinking about. The reality is that every single person out there in the market, including me, is trying to outwork and beat everyone else in order to make sure that they get the alpha. And if you're not willing to do the work, your lunch money will get taken by someone who does, and if you've not got an edge, then you will be liquidity for someone who does. So when I say you need to focus on surviving, you need to be able to remain in the game for when the good times come around. Everyone made money in 2020 and 2021, but those Furlough Freddies and Fionas are now long gone because they didn't manage their risk and they just blew up. Trading isn't easy, and anyone who says it is either lying or selling something or both. First, you've got to learn how to survive, and then you've got to learn how to adapt. So hopefully this video has been helpful. If I haven't put you off trading completely by now and you are still interested in learning, then sign up for my free newsletter below where I'll walk you through my trading process. Please do give the page a like and subscribe as it supports the channel. Thank you very much for watching, and I'll see you in the next one.